Welcome back, everyone, to Vox Markets. My name is Paul, and I'm delighted today to be able to speak to Adam Minto, CEO of Revolution Beauty, a super innovative and fast-growing brand disrupting the global beauty industry by offering high-quality yet affordably priced cosmetics and personal care products. So welcome, Adam.
Lovely to meet you, Paul.
Yeah, well, big congrats on the successful IPO, raising £300 million
yes,
and 160. Wow. I know 160p with their first day dealings, I believe, starting on 8 a.m. on Monday morning. But before we sort of like dig into those details, I just want you to quickly run us through sort of the key founding principles behind the business.
Sure. So, as you may know, Paul, I've been in the beauty industry for 32 years. Obviously, my skincare is very good, as you can see. I guess, I've supplied, designed, manufactured for a variety of the businesses that are built up to the global beauty world. And the global beauty world is obviously huge, and it is controlled by the major Goliaths, and they're fantastic companies. However, I had felt 8 years ago that there was the time for this type of brand, and the industry had become very elitist, in my view. It used models in its imagery, and it retouched those photographs. It, would you believe it, at the time, and still a lot of the brands today are not cruelty-free. And beauty industry had not a great rep, really, not a great image. And so I wanted to create a brand that was affordable, and just touch on that for a second. There was a viewpoint, and there still is the viewpoint, that the more you pay, the better quality you get. And that is not the case in the beauty industry. And brands such as Revolution go out to prove that. That drugstore is cheap and department store, are they around anymore? Department stores is expensive and therefore better. And that's not the case. So I wanted to create a brand that had a positive point of view, that to the consumer, not this, you need to look like her or you need to look like him, that had phenomenal quality products, cruelty-free, at affordable prices, and then have this diversity. So at the time, there wasn't a shade breadth in the range, and everyone needs something for their skin tone. And then I, purposely wanted to build a global brand. I'd seen many of the brands that I manufactured for and created for these companies not go global soon enough. And the social media world means that you actually need to do that quite purposely right at the start.
Yeah, well, I've actually got a bit of history as well, so lasting about 30 years. And you probably don't know this, but I actually used to work for Unilever, and at the time,
did you? Oh.
Yeah, at the time we owned Rimmel.
Yes. Well,
we own Rimmel, Calvin Klein,
Calvin Klein Cosmetics,
Elizabeth Arden, and Dove. Now, I remember these marketeers, they used to sort of do their TV campaigns, and it basically took them almost a year to launch a product. Not only because they had to then sort of like, do some consumer research, but they had to then sort of focus groups. They had to book advertising agencies. They had to agree with the actual retailers when it would go in. They had to organize print designs for displays and all. And the problem was, I mean, I was a sort of sad finance man, and I was having to pick up the pieces, and the waste was enormous. And one of the key reasons for the waste, because it took so long, even if they were right at the time with their concept, by the time they launched it 9 to 12 months later, they were wrong because the market moved on. So how is Revolution Beauty disrupting that?
Well, it's really interesting. So you would have worked at Unilever when I was supplying Rimmel. So you would have been there in their old factory before it was knocked down by the
Ashford, Kent. Yes.
And then it moved to Eureka Park. So
that's correct.
And they sold it to Coty, which is Benke's, as you know. So I was actually one of their manufacturers. So the stuff that you couldn't make in your factory in Ashford, anyway. You're absolutely right. The problem, and it still is today in the industry, is you will have marketeers who might be fabulous, who might be amazing. So please, I'm not disrespectful of my competitors. However, their business model is very different to ours. Their business model is about the big bet, the marketing big bet. And secondarily, for all the things you said is still the same, but secondary, the stores, because they then rely upon 90% of their sales become stores, and it's complicated running stores, and the planning is huge. So you've got this crazy thing where they're planning for the big bets. I think crazy thing, a year and a half in advance. The stores take a year to get organized, and we're very different. So I sat in those boardrooms, your ex boardrooms, and I would give them an idea, and it would quite literally, and I believe still does today, take them 18 months to launch that. I know, because I was a manufacturer, I know I could do it in 16 weeks. And what we do is we launch products on a trend in less than 16 weeks, direct to consumer on our website. We then test them. Some of them we know we're building into wider distribution. It's our core. We know we're working in concealers or we're working in serums, so we're adding. So they are already planned to go into store later, but later, not waiting 18 months. And then some of them we're testing, and we're saying, right. And of course, on my website, on revolutionbeauty.com, and our amazing partners we work with outside digitally, we get pure data. Unfortunately, in stores, you don't get pure data. So we launch products, we can activate them globally. So what do I mean by that? They launch on our website, UK, Europe, USA, and are fulfilled in the USA already. So we've got this global infrastructure, and in Australia simultaneously. We can then tell via social media listening, by reaction on social media, by how influencers are talking about the product. They love it, they don't love it. And then obviously sales results, and then that allows us to scale. So if it works, we can then follow the data and scale it and put it in our global bricks and mortar platform as well. So I don't rely upon the big bet. We rely upon little safe bets. And that then allows us, Paul, to be bold, because we're not taking the big bet risk as you described. We're taking a mixture of data, and a mixture, 50% data, 50% intuition or trend, and then putting it together and making little bets every day. And then every day we can then work out, this could be a big bet, but the odds are stacked on our favor because we've tested it and we know how to explode it. And that's what's changing things. We can take a trend and give it to the consumer in less than 16 weeks. And most of my global competitors take 18 months to launch something. So of course, when they kill it, and you've worked for one of the best consumer goods companies in the world, Unilever, they're the third biggest company in beauty still today, mass beauty. And of course, when they get the big bet right, that's fantastic. But I'm not looking to beat them. I'm just looking to be different to them and more reactive. So.
Well, we used to, as a finance man, we used to sort of take 10 or 15 million pound advertising budgets, and we used to burn them in about sort of like 2 or 3 months.
And that's why the costs, and I talked about the cost. So obviously you would have said to those team, they would have said to the team, you need a much bigger margin because you're not going to get it right. So when you spend that money on TV and it doesn't work, you've got to have this cost of goods to retail that big now because you're going to make mistakes. Whereas because we're making little bets, we can make the product quality right at the right retail price for the consumer. And we can do that because we're not taking the marketing big bet. You would have said you need another 10% because what if it goes wrong? I don't have to add that 10% on to the consumer. So very different.
And then you've obviously got the model perfect in terms of the innovation and being able to adapt it and refine it very, very quickly. How do you get into retailers? Because that was the other big problem. It was getting effectively in supply and distribution because there was limited shelf space, and big retailers wouldn't take you on unless you had demand pull. And that was,
sure.
and they used to always be the concept that you had to do a TV advertising campaign to create that consumer
100%.
recognition, the brand affinity, and to draw it through. So how do you do that?
Well, odds were stacked on my side. I'm not going to take full. I'm not the cleverest man in the world. So
yeah.
how obviously a number of things to come back to you is I built the business deliberately to be digital first, social media first.
Yeah.
So we launched the brand direct to consumer. However, as you say, most of the market, still more than 90% of the mass beauty sales are sold in store. Yeah. Now that's going to change, and it's changing very fast. And of course, the pandemic has sped up that change. But my vision was to sell everything direct to consumer. And of course, 8 years ago when I was starting, social media was at its infancy, and now it's the biggest thing on the planet. And Revolution Beauty is one of the biggest beauty brands in the world, and definitely the biggest on social media, and definitely the biggest beauty brand in Europe on social media, with followers and engagement. As we get bigger in the US, by the way, that will mean we're really building a super company, because obviously the US is huge for social media on some of these US brands, but they really don't have the following in Europe. So I think we're going to build this super business. Anyway, but I had the relationships already with a lot of the retailers. So Superdrug are amazing, Boots are amazing. I've made own brands for them before. So I had it wasn't like a founder, how do I create those relationships? I had amazing relationships with Boots, Superdrug, with Ulta in the US, and many retailers around the world because of my making for them for their brands. So that was simple. But the plan was very different. So L'Oreal are amazing. Well, L'Oreal's Coty, Unilever, he used to work for, their model is to sell their products to every retailer. Yeah, as you know.
Yeah, 100% distribution.
100% just you go for market share, because that's what you want, and you sell it to everyone. My model was quite quickly. I knew I needed quite different. You know, I needed to build a global brand, but also what I needed to do was to do that, I can only pick one retailer in each country. So that 7 years ago, I was Superdrug. It was Ulta in the US, it was Watson's in Turkey, it was Rossmann in Germany. And I partnered with them and said, right, we'll give you this brand exclusive, let's partner together. And that really worked. And it really hadn't been done much in makeup. And definitely isn't done in skincare, as you know, from a Unilever point of view. You sell Garnier, you sell Nivea, you sell to everybody. Everybody. And we partnered with these retailers, and that's been fantastic. So, you know, we built fantastic relationships with the retailers because we win with them, and we can give them crossing the road opportunities rather than it being in all their competitors. And I think you know, that was and still remains a key principle of ours. We will not over proliferate our brand. And as you know, when brands get hot, one of the problems is, I think, you know, people will get greedy and they think they can sell their brand everywhere. And there's a balance of proliferation there. And of course, I believe that digital was coming. So what I'm looking for is this wonderful balance of bricks and mortar and digital in the business, which means that, you know, we truly are omni-channel. And obviously, you know, very different to L'Oreal and Unilever and Coty that will sell their products with greatest respect to everybody who asks them to for listings. And, you know, it's just a different model again. So we're very different.
You've obviously got a fabulous sales and marketing and branding director there as well, which is obviously
we have an amazing team. One of the big differences that I've again been lucky to is, as you know, the beauty world is all about M&A. While you were at Unilever, you probably acquired God knows how many brands. They just acquired more brands. With great respect, they are fantastic, you know, distribution companies, as you know. So the way they grow their business is by acquiring. Now we've chosen to IPO. We do not want to be the beauty sellout. Everyone, as you know, sells out. But the benefit of that also has been that I've been able to attract the best talent, those people that were in those amazing brands, that they've gone bought by L'Oreal, bought by Coty, bought by Unilever. And that sometimes they go on to stay in those companies. But when they've been in an independent company, suddenly being in a corporate juggernaut isn't great. So I've managed to get experience and talent into the business. We have a phenomenal team Revolution that have built brands before I've been building this brand. So it's a fantastic, we have such a great team Revolution of experience. Yeah.
And then to sort of get that drive, that demand pull, I'm guessing you use, rather than use your TV advertising, use the strength of your endorsers, because again, Unilever, as you rightly point out, was sort of like almost wedded to using supermodels and very expensive ones, whereas you guys seem to have sort of perfected that more, so you get that brand pull into your retailers through using better endorsers.
When we go into a country, it's really quite interesting. 3 years ago, 4 years ago, I was having the same questions you're asking me, and people would say, well, how are you going to break Germany? And I said, well, I'm not doing a TV advertising. That's not our style. And then we did a test in Germany. And of course, consumers flocked because they knew about us from social media. So how we do things really authentically. We have to be really live up to our values. We can't then suddenly, when we're working with influencers, change those values. So as I'm sure you know, there's a thing called micro-influencers that are phenomenal. And that word is kind of sounds odd, the word micro-influencer. The basic micro-influencer is a consumer who is now happy to share that they love this product, they hate this product, they think it's amazing. Now, years ago, they used to tell people in a pub, they used to tell people when they were together. Now they use their social media to say, I love Revolution's concealer. They may not be an influencer, but we call them micro-influencers. And then generally we'll use an element of paid for influencers who have obviously an incredible audience. We will only select those if they're already reacting to us organically. And it's really interesting. Obviously, the prestige industry has used influencers all the time. Most people who are following influencers are not of the demographic that can afford prestige. So you find actually these very amazing, highly paid influencers, they do need to use a lot of affordable brands because that's generally their demographic. So we find widespread language about our brands, people talking about our brands, and then we'll use naturally anyway. So a mega YouTuber will review drugstore products, and they'll, just because to engage with their demographic, not just to talk about YSL or Dior and things like that when they're getting paid a lot of money to do it. But these are phenomenal creators, as I'm sure you know. The influencers of today are the brand builders of tomorrow, and it's staggering the effect they can have on your products when you engage with them. So we obviously do our version, which is not advertising on TV, but working with an influencer to talk about our product authentically. Well, we won't choose someone who is talking about our competitor's concealer yesterday and then talk about ours and say it's the greatest thing. So these are long-term relationships that usually at least start at 3 months, sometimes go on to years. So we invest together as a partnership. So
I mean, it's a reflection, isn't it, of this fragmentation of advertising now, and who's actually key for sort of like creating that demand.
Real people talking about their real experiences, whether they are a micro influencer, as in just a consumer, or the best mega influencers are real people that people identify with. And if they are, which most of them are, clever, they will only talk about the brands that they love, and therefore they have this whole authenticity about them. So they keep that trust value. Rather, they are quite rightly getting paid, but the best ones obviously only talk about, and they get paid for the products that they believe are good. So it's really refreshing, I would say.
Well, it's certainly your marketing strategy works, because the hard bit I remember from Unilever was the switching of consumers to change a brand, because they had a lot of brand affinity and they recognized it and were very happy with it. So to get so much growth and so many new customers on board. Now, can you just talk through the longevity? Because equally what you get is, if once you switch them, say the hard bit is the acquisition cost, but once you switch them, the length that these guys can, or these people can stay with you for years, because they
100%.
They love the brand, because they recognize it, and they feel that they associate themselves with the value. So you've got a really good mind there to sort of like look forward.
100%. 100%. So obviously we have a number of different ways how we bring customers into us and how we keep them, hopefully. So we have a good, better, best principle. So what does that mean? So there's the entry product that a younger customer would enter into. And then we have our brands within our portfolio that as that customer comes from being a Gen Z to a millennial to an older customer, we're finding either packaging and or branding guidance that allows them to grow up with us. So it's really interesting. We're at the grand old age of 7 years old. And obviously, when we launched, we got the 17-year-old. The good news is I get demographics from amazing retailers such as ASOS. We're really keeping in that 25-year-old area, which is fantastic. And of course, we didn't have the 25-year-old to start off with because apparently she felt she had to buy Mac. Now she's staying with us because she trusts us and did it. And so that's the way we are trying to do it. Of course, and then I run, as I call it, our appointment to be relevant every week. So that is exactly that I talked about in my new products. We look at the data. We look at the market, what our competitors do, of course, but very little about what our competitors do. But we look at that. We look at the size of the opportunity, Paul, that you'll have looked at in Unilever. Right, the market is this big and blah, 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 blah. And that's amazing because it's data. The problem with data is it's yesterday. And then we are acting on our intuition of the latest trend, this fast turnaround. And that, if we are doing that right, is our appointment to be relevant, which means that we're capturing the younger customer. So he or she is coming to us because the early adopters are always the younger customers in most cases. They're the ones at that crucial age between 16 and 22 that are obsessed with how they look, obviously, how they want to be, brands that they believe in. So clean beauty is changing everything. You know, skincare is being blown apart because, you know, it's not a £100 skincare jar that miraculously makes you look 10 years younger. It's about ingredients. Well, I think one of the most funniest things, and they will remain nameless on this interview, second biggest beauty company in the world owns the most expensive skincare brand in the world. And they recently bought a competitor of mine called The Ordinary, who is all about transparency. It's about the ingredient. So it's a really interesting change of work. And you find that the early adopters are the ones to get that, you know, that they're not mums or dads who have got lives, mortgages to pay for. And the interesting thing is, I'm sure you know, trend travels upwards. So what you do is you have sons and daughters, younger sisters, and they tell upwards.
Can I give you a data point?
Okay.
My Vox Markets sales and marketing director is 51. She's got 2 young children, teenagers, and she absolutely loves Revolution Beauty because her kids are using it.
It's the way things work now, which is really weird because a generation ago it would have been in reverse. So, you know, what you've seen this, I'm sure you've spoken to the amazing digital fashion revolution that's been going on. So what it used to be is you would suddenly start dressing as you got older, like who is now your nan and granddad. But now you take your reference points for your sons and daughters, and that's amazing. And that obviously is a massive change from 10 years ago. We all ultimately become like our parents, I know. But the good thing is we are not using the same skincare or makeup like our parents had, and we're definitely not dressing like our parents did. So well, it's a reverse.
Well, as you say, you've got that endorser program from obviously, you know, your marketing. Then you've got your endorsers of your consumers to parents and to their friends, etc. And then you've got the longevity of that person, of the brand association, to have a lifetime relationship with that person. So,
my job is, as I said, I've got to find a way, because people go through life stages. How do I keep them? They've got more money to spend. How do I keep them? How do I look after them? Of course, we do that with our retailers. We do it on our website with the products. And then how do I keep the younger customers coming on? And the only way of doing that is not relying on the big bet. Is relentless focus every week, not believing your own hype, bringing in the new customers, making sure you're looking at your data points. So yeah.
So how big can this business get? I did notice that, you know, sort of like, you know, your 14-month revenue to the end of February 2021, which was obviously like 3 or 4 months ago, was 157 million pounds. I mean, to do that in 8 years is just absolutely phenomenal. I mean, what are you looking at, sort of like, going forward? Because
obviously, I think we, in the 7.5 years that we've been live as a brand, so we're just over, coming up to 7 years 4 months. We're live as a brand. I think what I know I've done is I've built a digital and bricks and mortar mix, and that's what matters, because I need to be where the consumer is. And I really want that balance to remain in the business.
Effectively using you retailers to showcase your brand. So effectively,
and gain share from the competitors, and build awareness and be where the customer. Any brand, you know, needs to be, not be elitist. It needs to be where its customer is. But I don't want to be, if I'm choosing,
you don't want to be everywhere.
If I'm choosing Superdrug, I don't want to be in a supermarket. If you understand, I'm not going to be in a discounter. As you know, L'Oreal, quite rightly, for their business model, are everywhere, and that's not where I want to be. So I want that balance. I want to be in the best retailers and the best digital platforms. So I know I've done that. I know I've built 45 countries. The most crucial thing probably is keeping our product relevant and doing new categories, which I'll talk about in a minute. And then it is obviously the team and the infrastructure. So the heavy lifting of infrastructure, operational infrastructure, is done. We have three DCs for B2B. And most crucially, with D2C on 3 continents already. So we're not trying to ship everything from the UK. I have offices in 5 countries for brand relevance. So it's now about my platform. So my platform is digital and bricks and mortar, not just staying within and I'm in 45 countries, bricks and mortar. So I know exactly where I believe this infrastructure and this team can take this business to $1 billion in revenue, and I hope it's within the next 5 years.
And just the size of this market. I mean, it's a $200 billion market, isn't it? So $1 billion, you still only have sort of like 0.5%, or just less than 1 anyway.
Here's one nugget, and I probably shouldn't name the brand, but the first brand that I ever made for 32 years ago is apparently the 20th biggest player in the global mass market beauty. And when we say mass market beauty, that is makeup, skincare, hair care, and fragrance, okay? Not men's products. So as far as I'm concerned, that size of the company, as I understand, has a 2.4 billion revenue. Now, one thing I'm sure of is that in every point of location that I compete against them, we smash them out of the ballpark. So it is about time and execution. I could get there much faster if I decided to go like, but I want to keep the brand relevance and hotness there. I want this digital balance alongside bricks and mortar balance. I have a phenomenal relationship with Superdrug. I'm not going to go and sell to all of Superdrug's retail competitors. That's crazy. Why would I do that? So so I believe we can beat this company, and they've got a $2.4 billion business. And the only way I'm going to know that I can beat that company, Paul, is not by relying upon the big bet, is by every week relentless focus on brand relevance and brand focus.
Well, I'll just highlight to investors, if you take those sort of like indicative numbers and look at sort of a competition on EBITDA margins. This is just my hypothetical stuff. But even if you took a conservative 400-500, well, so let's say for argument's sake, you doubled your revenue in 5 years and only got to 400 million of turnover, and did the similar sort of EBITDA margins you're currently doing, you'd hit 50 million of EBITDA times the market multiple of 20. That would give you £1 billion market cap compared to your listing market cap today of 495. Now, upside, if you ever do manage to get to $1 billion in turnover, you'll get operating leverage. And let's just hypothetically say you do 20% EBITDA margins, which frankly is still less than the sort of top guys, because they do 20 to 25%.
Because they're leveraging their economies of scale, which we're not at.
And also they have masses of wastage in that as well. So you could definitely increase it. So if you did basically 20% on £1 billion, that would be 200 million times 20. That would be 4 billion. You know,
mind-boggling, isn't it?
Yeah. It is, absolutely phenomenal. So you've whet our appetite on that one. That's for sure. And what's sort of like the news flow going forward? What do you see sort of like break the next sort of 6 months, 12 months, breaking into new markets, or just really continuing to do what you're currently doing?
We've got lots of exciting things that we'll obviously announce to the market in the normal cadence. But very exciting. So the call outs are obviously we have new distribution in bricks and mortar. Which I can't tell you now, but they'll be exciting, and they will be, for next calendar year. Very exciting. And we've achieved a phenomenal, which I can talk about because it's public knowledge. Obviously, we have recently gone from retailer number 1 in the US to retailer number 2. So we were exclusive in Ulta, and we are now also available in Target. And as I've been telling the investors I've had the privilege to meet, we have quite literally, that happened from January this year, doubled our bricks and mortar sales in the US. So there's a phenomenal runway for growth. USA will be our biggest country this year. And I think, we'll grow tenfold in our journey. It is a monumental market. It's the biggest beauty market in the world. And we're only in 2 retailers. We have also, what you're going to hear from us is our digital acceleration. So we have a relationship with THG Ingenuity, which obviously a lot of your followers will know about, of course. And the Ingenuity opportunity for us allows us to get to more countries, of course, faster using their infrastructure. So there's tremendous opportunities. In January of this year, we onboarded in the US the Ingenuity backend, and that's fast accelerating our business. And then finally, it's the new category. So Revolution is huge in makeup, represents about 70% of our sales. Skincare, fast accelerating. You'll know about this from your Unilever. And now in January this year, we also launched our hair care. I can tell you that on our Revolution D2C, 4 of our top 20 SKUs are already our hair care SKUs. Wow. So we believe that will flow out into our platform. Actually, our hair care range is already in Superdrug and Boots and smashing it. So that we're building that way. So you asked about my consumer and I guess our competitors. So Revolution is massively makeup, early doors in skincare, which is a bigger market than makeup, very early doors in hair care. Those 3 categories, we're smashing it. So we expect to load them into our platform, our infrastructure, digital and bricks and mortar and global, with the right decisions. And then what's coming is our fragrance category in Q4 and our men's category in 2023.
Wow, brilliant. Well, we'll look forward to that. I mean, I would also say...
And of course, we're able to do all that in a risk-free way because I test it digitally on our own website, get the data, work out what is working, then match it with the future and the intuition, and then refine it. And until we've refined it, then we put it into our platform. So, I'm able to create a product and not have to sell it to a retailer. I'm able to actually refine it better and then give it with confidence to our retail partner. So I'm not keeping it away from our retail partner. I'm making sure it works for our consumer. So then we know it works for our consumer. So I think it could work for your consumer, Mr. Superdrug, Mr. Boots. And that's what builds the category. So we'll grow into a mini L'Oreal. That's the future. Very different to L'Oreal, who are awesome, who are whatever they are, 25 billion, no, 45 billion, I think, something crazy like that. And we will, that's that's the vision. And I was determined, Tom and me, my partner, to not be the beauty sellout, as we've discussed. You know, Rimmel was acquired, been acquired many times, started in France, as you know, and then in England. You know, it's you know, Joe Malone, Bobby Brown, they were people who sold their brands. And there's this awful period where founders feel like they need to do that. And, you know, it's not from bloody mindedness, Paul. It's just actually, I think it's wrong to sell to L'Oreal for the consumer. It's definitely not right for competition and newness for the market. And thirdly, to build shareholder value, there's so much more for us to do for our new investors. We believe that in 5-7 years time, you know, as you said, we'll have a phenomenal business that will have returned incredible value to our new amazing investors, which is, you know, really proud for us. That's what keeps me motivated anyway.
Yeah, well, and also I'd say that, you know, even during COVID, you were taking market share, and now that the world in the developed markets in particular is opening up, the US, the UK, more people are going out, more people are going back to work.
US is on fire, Paul, as you can see from the report. So we've seen a phenomenal, whether it is when the president left or stimulus checks, which were very, you know, noticeable, the stimulus checks, but the US customer has gone out of their home and shopped. And definitely, they're able to date, go to dinner, to dance. Obviously, we're not yet to do that across Europe and UK, but it's coming. Well, you know, never say never with coronavirus. Boris was very bold and now he's less bold. So obviously, but the reality is, what we do know is that Revolution is a well-balanced global business. USA is bigger than the UK. The rest of the world is way bigger than the UK now. So even if UK struggles, you know, in whatever may happen with coronavirus, we've got a very and of course, when the shops are shut, it does come to digital. So it's I really want, obviously, the world to get back to whatever its new version. And I think we're able to really accelerate when we know that is. So I'm not being cautious here. Everyone needs to understand, when there's no coronavirus anywhere, where customers are going to shop. How much are they going to shop digitally? Because it's up that digital has an unfair advantage when you couldn't go to store, when stores are open. And again, that's why I respect all of our bricks and mortar partners, and balance is obviously the future. So, Well,
anyway, thanks very much for your time there, Adam, and absolutely fabulous, successful IPO, and really looking forward to seeing how the business develops. I mean, as again, I'll just remind investors, you know, if I took my conservative valuation, you're going to double the share price in 3 or 5 years. But if you take the upside case, you're going to sort of like potentially, well, 8-fold it. So it'll be absolutely incredible. That'll be a revolution for investors. So thanks again, Adam, for your time, and look forward to hearing how the business progresses going forward.
Thanks, Paul. Thank you.